The next activity ratios is payables turnover ratio. Since the payment is made to creditors, it is also referred to as creditors turnover ratio. So now students, what does this ratio actually tell us? This ratio comments upon the efficiency of the business while making the payment to its creditors. So it comments upon the efficiency of a business while making payment to its creditors. Whether you are paying them on time or you are paying them late, this kind of reflection is made upon by this ratio. Now students, as per the concept of prudence, we must understand one thing, that this ratio, that is creditors turnover ratio, should in any way not be less than your debtors turnover ratio. That is, while making the payment to your creditors, you must make sure that you are not making payment to them faster than you are actually receiving payment from your debtors. In case you are doing so, your working capital requirements would actually multiply. So what does the prudence concept state? It states that usually the debtors turnover ratio and creditors turnover ratio should be matching, or debtors turnover ratio should be higher than your creditors turnover ratio. That is, in any case, you should not make payment to your creditors at a rate faster than your debtors are making the payments to you. Now students, how come this ratio is calculated? Let us come to the formula. The formula for calculating creditors turnover ratio is net purchases upon average creditors. Now students, this is the formula for calculating creditors turnover ratio. Remember, in case credit purchases are there, then you must use credit purchases, because creditors arise on account of credit purchases. So a better expression is net credit sales purchases, rather, since it is creditors turnover ratio, it would be net credit purchases upon average accounts payable. The average accounts payable would include both creditors and bills payable. Now, let us see how these various numerator and denominator, the components, are actually calculated. Credit purchases or net credit purchases would be equal to net purchases minus cash purchases, and the denominator, that is average accounts payable, are equal to opening creditors plus closing creditors, opening bills payable plus closing bills payable, the sum total of all these four divided by 2. So we can calculate numerator by this formula and denominator by this formula. Once we have calculated both of them, dividing them will give us creditors turnover ratio.